Welcome to The Explainer. Today, we're going to break down the latest quarterly earnings report from cybersecurity firm Sentinel One. And trust me, it's a fascinating look inside a company that's at a huge turning point. Everything you really need to know about this report, well, it kind of starts with this one number, 23%. It's the big headline figure, but what does it actually tell us about the health of the business? Because look, 23% growth is impressive, no doubt about it. But that's just the beginning of the story. So in this explainer, we're going to do a full-on health checkup to really understand the complete picture of how Sentinel One is performing. Okay, let's dive right into this first section and really unpack that 23% figure. Where is it actually coming from? It turns out that number is doing double duty. It represents year-over-year growth for both total revenue and something called annualized recurring revenue, or ARR. Now, ARR is a super important metric for any subscription business. It basically predicts the revenue that can count on over the next year. And when you see both of these growing together like that, that's a really strong signal. And here you can see what that percentage means in, real money. Revenue jumped from about $210 million in the same quarter last year to nearly $260 million this quarter. That is a pretty significant leap in just a year. So a 23% jump is great, but where is that growth really coming from? Let's decode the growth engine, because the details here are just as important as that headline number. This is a big one. A massive milestone was hit this quarter. Annualized recurring revenue, that ARR metric we just talked about, it officially crossed the $1 billion mark. For any software company, hitting $1 billion in ARR is a huge signal of scale and that you've got real market staying power. It's a major, major achievement. And according to the CEO, Tomer Weingarten, this isn't just happening out of nowhere. He directly links this billion-dollar milestone to what he calls growing demand for their main product, an AI-native security platform. Now, what's really interesting here is that the growth isn't just from getting more customers. It's about getting bigger, higher-value customers. The number of clients spending over $100,000 a year grew by a solid 20%. That suggests they're really making headway in the large enterprise market. But strong growth is only half the equation for a modern tech company. The bigger story this quarter, and honestly the one that really got Wall Street's attention, is all about profitability. And to really get this next part, we gotta quickly touch on a term you see all the time in these reports, non-GAAP. All it really is a way of looking at the numbers that strips out certain expenses, like stock-based compensation, to give you a clearer picture of the core day-to-day health of the business. Okay, so with that in mind, check this out. This is the payoff. Using that non-GAAP view, just look at the swing in their operating margin. A year ago, the company was losing 5 cents on every dollar of revenue. This quarter, they made 7 cents. That's a 12-point swing from burning cash to generating it on their core operations. That is a massive turnaround. And you see pretty much the exact same story with free cash flow margin, another super critical indicator of financial health. It went from negative 6% last year to positive 6% this year. So this shows the company isn't just profitable on paper, it's actually generating real cash. And this wasn't some happy accident. According to the company's outgoing chief financial officer, Barbara Larson, this was all about disciplined execution. It was a planned move to focus on financial rigor. And wow, did it pay off? Okay, so you just heard me say outgoing CFO, right? Well, that's because right in the middle of all this fantastic financial news, the company also dropped a pretty big bombshell about its leadership. So here's the twist. Barbara Larson, the CFO who literally just oversaw this huge shift to profitability, is leaving. And she's not just jumping to a competitor, she's leaving the cybersecurity industry entirely. Now, to their credit, the company immediately laid out a very clear 3-step plan to manage this. Larson staying on for a bit to help smooth things over. The chief growth officer is stepping in as the interim replacement, and they've already started the search for a new permanent CFO. The CEO, Tomer Weingarten, he came out and publicly thanked Ms. Larson for all her work, and he made sure to express his confidence that the interim leadership would provide a steady hand through all of this. So, with a big leadership change on the horizon, what does the company actually expect for itself? Let's take a look at their official forecast to see where they think they're headed next. So, looking ahead, the company is guiding for continued strength. They're projecting revenue to hit $271 million next quarter, which should push them over that $1 billion mark in revenue for the whole fiscal year. And, what's really important, they expect to keep those positive non-GAAP operating margins. And it leaves us with a big question mark hanging over this otherwise fantastic report. The company has proven it can grow like crazy and become profitable. The next challenge is to prove it can sustain that high level of performance through a major transition in one of its most critical roles. We'll definitely be watching to see how they do.